Hi, hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Very good morning. Today is Wednesday, the 29th of November. So before we start, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so let us get started with the key events or data that has actually took shape over the European session and as well as early today Asia session right before 11 a.m. So let me share with you some highlights over here. So yesterday was actually we have a slew of Federal Reserve officials speaking to the general public ahead of the 13th of December last FOMC monetary policy meeting before 2023 ends. So I would say it's a rather a mixed slew of Fed speak in terms of narrative. There are actually a couple of official Fed Waller actually signals support for keeping rates steady. So that sounded pretty much of a dovish side of the story. But however, there's one particular Fed official woman. She actually favored hiking rates if inflation progresses stalls. So she's tilted more towards the hawkish camp. So this is not kind of surprised because if you look at her previous past Fed speak public speeches, she tend to tilt towards more on the hawkish camp rather than the dovish camp. But all in all, what we could see over here is that there is no big change in the futures pricing. That means the interest rate future pricing as calculated by the CME Fed Watch 2. So based on this CME Fed Watch 2, there's still a very, very low chance of another interest rate hike in 20 in the in 13th of December, pardon me, FOMC. So it's only 3.9% chance of an interest rate hike. So more or less, market is now almost pricing in at 5.25% and 5.5%. That means 10 pet. And what's interesting over here is that this 5.25% and 5.5% Fed fund rates is very likely the terminal rate for this ongoing current interest rate hike cycle. That means if you, i.e., how do we know that? If we click on the accumulated probabilities on this CME Fed Watch 2, you could actually take a look at this table over here at the bottom. So this is the accumulated probability indicating to us the next 13 months of FOMC meeting. There are the the monetary policy expectation as inferred by the interest rate futures market heading all towards the end of 2024. So if you look at over here, the chances of any chance of a hike is less than 5% right now. All right, so very hard. Instead, market now is being tilted towards a very a Fed pivot. That means, i.e., the Fed will actually starts to switch to a interest rate cutting cycle as early as March this year. Next year, pardon me, March next year, March 2024, which is at a 40% chance. The bulk of it will comes in either May or June, 72% chance and 89% chance. So all in all, given this higher or increasing expectation of a Fed pivot towards a interest rate cutting cycle, that actually drives down longer term US Treasury yield, and which also in turn starts to actually see a renewed resurgence of this persistent dollar weakness that has taken shape in the last 2 weeks or so. So that actually also encourage a bit of risk on behavior in the US stock market. So if you look at the performance of the US stock market yesterday, continued to be very positive. I would say not really that positive, but what we could see, most of the major indices, especially those that are skewed towards the 7 mega cap stocks, actually outperform. So though we call that Nasdaq 100, Nasdaq 100 has a high weightage towards these mega cap stocks like Microsoft, we have Nvidia, Apple, and whatsoever. So up 0.3%, the SPX up 0.1%, the Dow Jones Industrial up positive 0.24%. But however, the Russell 2000 going to underperform with a negative return of negative 0.5%. Why? Because the Russell 2000 is more kind of skewed towards a small cap company who has weaker balance sheet. And do not forget over here is that why the market is not expecting a Fed pivot to come in as soon as March this year, because due to the fact that the previous trickle-down effects of a current interest rate hike cycle in the last 1.5 years has started to trickle down to the real economy. That means there's actually a high chance of a recessionary, we call it a recessionary environment in US in the early part of next year. So that should explain the underperformance of the Russell 2000, given that the bulk of their constituent stocks have weaker balance sheets compared to the Magnificent Seven. All right. So now, with that, right, let us now immediately, okay, and also, going on over here is that we have the RBNZ interest rate decision. That is the New Zealand Central Bank. Market expectation to keep the interest rate unchanged at 5.5%. In line with global major central bank as well in the last month. All right, and what's interesting over here is the AU. So the AU Australia CPI indicator. So this is the monthly CPI number out from Australia. For the month of October, it actually dipped or decelerate to 4.9% inflationary growth, way below market expectation of 5.2%. So if you look at the trend over here, right, I think this is the weakest, the first decline in annual inflation and the slowest pace since July. All right, so it actually went down as low as July number. So that actually kind of go against the reason we call it hawkish rhetoric that is being seen from public speeches of the newly appointed RBA Governor Bullard, where she actually stressed that Australia is actually still facing elevated domestic-oriented inflationary pressure, but that nevertheless actually did not derail the Aussie dollar strength that we highlighted at the start of this week. Later I'll share with you the technical chart of Aussie dollar. So basically the Aussie dollar now is more or less primarily driven by more of a increasing expectation of a Fed pivot towards the dovish side of the story. All right, so now with that, let us now start to take a look at the technical chart. So let us start with the stock indices first, the global benchmark stock indices. All right, so let us start with the Nasdaq 100 over here. Okay, so now what I can do now is let me expand my chart so we could focus more on my chart instead. Okay, so now Nasdaq 100. Okay, still recall that since the start of this week, we do have a bullish bias in the short term. So still no change. The Nasdaq 100 going to hover sideways between the near-term resistance at 16,160 that was tested last Thursday, but managed to held at this near-term support, range support since Monday at around 15,915. So we'll still be using the lower boundary as well as the 20-day upward sloping moving average that's coming confluence to this 15,765 / 15,690 key short-term pivotal support level. As long as this level is not surpassed on the downside, a breakup above 16,160 sees the next intermediate resistance coming in at 16,310. Right, so still maintaining that short-term bullish outlook, but however, this short-term bullish outlook will be invalidated if we start to see an hourly close below 15,690 to expose the next intermediate support at 15,380 level. Okay, now moving on, next will be the Dow Jones Industrial Average, which is the Wall Street 30 we call in our platform. So with that, I will actually tidy up the key short-term pivotal support level to this minor swing high area over here, which also confluence to the lower boundary of this minor ascending channel support level that is in place since 10th of November this year. So now acting as support at 13,175. Right, so as long as 13,175 pivotal support holds on the US Wall Street 30 index, potentially the next we would actually maintain that short-term bullish outlook to see the next intermediate resistance coming in at 35,830. But however, if we start to see a breakdown below this 35,165 short-term pivotal support level, we could start to see the start of a minor corrective pullback towards the next support level at 34,830, which also confluence with this upward sloping 20-day moving average. All right, so now German 30. So over at the German 30 yesterday is going to actually bounce off our pre-highlighted short-term pivotal support at 15,930 / 15,835. So still no change using this level as a short-term pivotal support for today to maintain that short-term bullish outlook. A clearance above the near-term resistance of 16,050 potentially sees the next intermediate resistance coming in at 16,200. However, a breakdown below 15,850 negates this bullish tone to see the start of a potential minor corrective pullback heading towards the zone of 15,660/15,560, which also confluence with the two key moving averages, which is the 200-day moving average and the upward sloping 20-day moving average. Okay, then now what's interesting over here is the Japan 225. So for the Japan 225, it actually bounces off right at this 33,100 short-term pivotal support that we highlighted since the start of this week. And also we did highlight over here is that yesterday's, since the start of this Monday's a corrective pullback from last week, this minor swing high area of 33,825, but the momentum has started to slow down. That means bearish momentum has started to ease, as indicated by the bullish divergence that was flashed out yesterday at the oversold level in the hourly RSI. So with this bounce off the 33,100 short-term pivotal support, and so confluence with the 20-day moving average. So for sure, this is indeed a key short-term support level to maintain our short-term bullish outlook. First resistance to look at will be the range resistance of 33,825. Above it sees the next intermediate resistance coming in at 33,410. However, a breakdown below 33,100 potentially kickstarts this so-called a minor corrective pullback towards 32,800 and potentially even 32,200, which confluence with this minor congestion area of 8th of November to 10th of November, as well as the 50-day moving average as well. Okay. One thing for sure, the outlier will be the China's related stock market, the China proxy. So what we could see over here is that China market going to be lackluster due to the fact of kind of a negative news flow up from China, especially that ongoing we call it outbreak of a flu, a symptom of flu outbreak among small children that driven a bit of fear of potentially lockdown or COVID-19 related lockdown again. So that actually drive down the Hong Kong 33 index. A break below, yesterday we turned neutral because of the mixed element, so it broke down below 17,300 level. So right now we are now looking to see a further potential downside to test the major support of 16,980/16,800 level. However, hourly only we need hourly close above 17,300 will actually negate this ongoing short-term bearish tone to see a squeeze up back towards the 20-day and the 50-day moving average that is acting as a resistance also closely at the 17,680 level. So for the major stock indices, we do have a potential short-term bullish outlook bias still remains intact with the acceptance of a outlier, which is the Hong Kong 33 index. All right, now FX market. So over the FX market over here, let us start with the euro dollar. Still, we call that we start to going to see this persistent dollar weakness. We call it trend that is intact since since last 2 weeks. So yesterday, the euro dollar managed to hit the first resistance level at 1.0990, hitting towards very closely the 110.40 intermediate resistance that we highlighted yesterday. So with that, the RSI continue to actually inch much higher. There's no clear signs of any bearish elements that is being reflected on the euro dollar in the short-term chart. So we will still maintain that short-term bullish outlook using the first we call it the first near-term support of 1.096 as a pullback zone, a pullback level. But as long as 109 figure level still maintains in terms of the support, means price didn't surpass below this 1.09 level, we also confluence with the lower limit of this ascending channel that is in place since 2nd of November low, we could still maintain that short-term bullish outlook towards the next resistance level at 111.30 if 110.40 is being taken up on the upside. But however, if we start to see a breakdown and hourly close below 109, then potentially we could see the start of a minor corrective pullback towards this 1.085 level slash 1.080 level, which is also confluence with the 200-day moving average. Okay, now moving on will be the European currency. The next European currency will be sterling dollar. So sterling dollar continue to accelerate on the upside, hit our resistance level at 127.20, 126.80. So this level has been met. So the next resistance level to watch out for will be at 128 figure level. So what's 128 figure level? Is in fact this clear medium-term congestion area that has taken shape from 25th of July to 22nd of August this year. And with that, we will actually tighten the key short-term pivotal support level to 126 figure level for today. So as long as this level holds for any potential first pullback level, with the first near-term support at 126.40. So as long as 126 figure level holds, potentially we will actually maintain this short-term bullish outlook on the sterling dollar, with the next intermediate resistance to watch will be at 128 figure. But however, if we start to see an hourly close below 126 figure, this bullish tone might be negated to see the start of a minor corrective decline towards 125.20 and even 124.40, which is the 200-day moving average, and the 50-day moving average coming closely to act as a support area as well. Okay, so that's for the European currency. So what's next for the Asia Pacific major? So let us start with the dollar yen first. So dollar yen going to plummet within our expectation. So it going to hit lower and break below the 21st of November minor swing low area at 147.30. So now this will become a near-term resistance level to watch. So given the fact that the RSI has also started to dip down into the oversold level, but so far there is no clear signs of a bearish or bullish divergence yet, where price action going to inch lower low and the RSI going to show lower low despite hitting the oversold level. So what we could see over here right now is that there could be some signs again of a minor, we call it a minor counter trend rally. So this minor counter trend rally, the cap of this a minor counter trend rally will be at 148.15 short-term pivotal resistance I have for today. So this is a Titan 148.15 short-term pivotal resistance, which confluence with the former minor swing low area of 22nd of November, and 28th of November now turns into a pullback resistance, and as well as a Fibo retracement of close to 50% as well. All right, so with that, as long as the minor counter trend rally didn't surpass above 148.15, we will maintain that short-term bearish outlook on the dollar yen towards the next intermediate support zone at 146.20/145.90, Fibo extension 0.764, and as well as the lower limit of this minor descending channel that I drew from the high of 14th of November. But however, if you see the hourly close above 148.15, then this short-term bearish outlook will be negated to see the continuation of a much more deeper counter trend rally towards 148.90 and even potentially 149.70, which is the minor swing high area of 23rd of November last week, and as well as the 50-day, 20-day and 50-day moving average that is also acting as a resistance around at this 149.70 resistance level as well. So i.e. all in all, as long as 148.15 short-term pivotal resistance didn't surpass, potentially the short-term bearish outlook still remains intact on the dollar yen. Okay, so now Aussie dollar. So Aussie dollar going to inch upwards, like I said, driven by the fact more on the dollar like the story rather than from the Australia fundamental factors. So, but however, what you see over here is that we start to see a bit of a pullback or profit taking right after that release of the we call it softer than expected Australian monthly CPI number out in October. But however, as long as this 200-day moving average and as well as the lower boundary of this 17th of November minor ascending channel level going to act as a support that may host any potential pullback, which is now 65.95. So as long as this Titan key short-term pivotal support holds at 65.95, potentially this short-term bullish uptrend still remains intact on the Australia dollar. Hence, we will still maintain our short-term bullish outlook on the Aussie dollar towards the next intermediate resistance at 67.10. Then followed by 67.45. All right, but however, if we start to see an hourly close below 65.95, then this short-term bullish outlook will be invalidated to see the start of a minor corrective pullback heading back towards the 65.20 level, 65 figure level, which is this minor congestion area over here for 15th of November to 22nd of November, and as well as the upward sloping 20-day moving average that is acting as a support level, very similar to this graphical support level as well as 65.20/65 figure. Okay, so that's pretty much sum up of the FX market. So very quickly, what's cooking on gold? So if you look at gold over here, gold going to inch higher and pierce above the 2040 intermediate support level, resistance level we have. So right now it's actually fast approaching this major range resistance at 2065 and 2006 2.75, which is the all-time high over here. So this is a major support resistance zone that is in place since 28th of March 2022. So that's close to about a 1.5 year ago level, which is pretty much significant. So with that, I would not want to actually have a level in short term higher than 2007 right now, given the fact that you also start to see extreme overbought level on the hourly RSI, but there is no clear bearish divergence a signal on the RSI. Over here, RSI going to inch higher in line with the price action. So with that, there could be a potential pullback given a very steep, we call it a rally yesterday in the short term during the US session. So the first potential pullback level to look out for in short term will be at this level here, the meeting line between two bullish hourly candle at 2030. So I was using this former minor congestion range resistance now turns into a pullback support as a tighten key short-term pivotal support level to maintain that short-term bullish outlook, with the major resistance to watch out for will be at 2067/2075 on spot gold, that's XAU/USD. But however, if you have an hourly close below 2018, then potentially we may start to see the start of a minor corrective pullback towards 2006, a break below 2006, which is the former range top of 27 October and 4th of November, exposes the 20-day moving average, also acting as a support level at 1997. All right, so that's pretty much sum up for the market insights that I'd like to share with you for today. So with that, do have a great trading day, a great day ahead. So before we go, let's take a look at the economic calendar. What are the events to look out for today? So for today, right, will be Wednesday. Let me very quickly scroll down Wednesday over here. So over at Wednesday, over the Asia session will be pretty much quiet, except for the fact that Singapore export prices and import prices will be revealed at 1 p.m. time today. And also, if you were to look at a couple of consumer confidence and consumer inflation expectation data will be out from Eurozone at 6 p.m. Singapore time, and over at the US over here will be pretty much quiet. But one thing to look out for over here will be the Germany flash inflation numbers for the month of November that is up at 9 p.m. Singapore time today. And also with that, we have a second estimate because this is kind of pretty lagging data, which is the Q2 second no, Q what you call it Q3 second estimate GDP growth rate for US out at 9:30 p.m. Singapore time. So with that, I think that is pretty much quiet for the rest of the US session in terms of economic data releases. So with that, thank you for your time, and we should speak again tomorrow.